Good evening. For Tuesday, 6 January 2026, we begin India first, using officially reported closing data from the most recent fully completed trading session. The Indian market ended the session in a controlled consolidation phase, after testing higher levels earlier. Nifty paused near record territory, while Bank Nifty hovered around a major psychological zone, signaling digestion, not damage. For tomorrow, the market has clearly defined decision zones. On Nifty, strength sustains only if price is accepted above the recent supply area. Failure to hold early gains would signal that sellers are still active at higher levels. On Bank Nifty, the battle remains around the psychological round number zone, where writers and buyers are both active. And as always, remember this clearly. The first 15 minutes tomorrow decide direction. Before breaking down the domestic structure further, let's place India in the context of global market behavior, because flows and risk sentiment still matter. Global market overview, why it matters for India. Global markets continue to operate in a selective risk-on environment. The US markets have not shown panic selling, but neither are they chasing prices aggressively. This kind of behavior generally supports emerging markets like India, provided there is no sudden macro shock. European markets showed stability, with investors favoring cyclicals over defensives. Asian markets remained mixed, reflecting caution rather than fear. Why this matters for India tomorrow is simple. When global markets are stable but not euphoric, India tends to trade based on internal strength, sector rotation, and options positioning rather than external shocks. This environment supports range expansion only when price acceptance is visible, otherwise markets tend to rotate sideways. Indian market overview. The Indian market's recent behavior is best described as pause after strength. After making higher highs, Nifty saw mild profit-taking. Importantly, this selling was not aggressive, volumes remained orderly, and there was no broad-based liquidation. Bank Nifty's behavior was even more telling. Despite being near a major psychological level, there was no sharp rejection, indicating that supply is being absorbed rather than dumped. This tells us one thing clearly. The market is not tired, it is checking itself. Such phases are common before either continuation with confirmation or short-term traps if acceptance fails. Sector performance today. Sector rotation remained visible. Auto stocks continued to show relative strength, supported by demand expectations and margin visibility. Financials remained mixed, reflecting profit booking rather than trend reversal. IT and defensives lagged, which is important. When defensives underperform while indices are near highs, it usually means risk appetite still exists, but money is being selective. Realty stocks held firm, acting as high beta sentiment indicators. Overall, this was not a defensive market, it was a rotational market. Top gainers and losers. Gainers were concentrated in autos, select private banks, and domestic-focused names. These stocks showed minimal selling pressure on dips. Strong close relative to intraday ranges. Losers were scattered, mostly from IT and defensive pockets, indicating profit booking, not fear. This divergence tells us liquidity is rotating, not exiting. FII-DII activity. Institutional activity remained balanced. Domestic institutions continued to act as shock absorbers, while foreign flows remained measured. There was no evidence of aggressive distribution by large players. This combination usually supports range stability, unless disrupted by global events. Technical analysis, Nifty and Bank Nifty. From a technical standpoint, Nifty remains in a higher timeframe uptrend. The index is now at a point where acceptance above resistance can fuel momentum. Rejection can lead to time-based correction. Bank Nifty continues to revolve around a key psychological level. Sustained trade above it strengthens confidence, while repeated failure may trigger short-term pressure. Trend is intact. Timing is critical. Nifty options analysis for tomorrow. Options data reflects a tug of war. Call writers are active near resistance, indicating hesitation to allow runaway upside. Put writers remain confident near support, suggesting downside expectations are limited. Inside the range, buyers bleed. Writers benefit. Outside the range, forced unwinding creates momentum. Tomorrow is about price acceptance, not prediction. Bank Nifty options analysis for tomorrow. Bank Nifty options show similar behavior. Call writers lose comfort if price sustains above resistance zones. Put writers gain confidence only as long as supports hold. This is a pressure cooker setup, where the first directional move forces adjustments. Market psychology. Market psychology is confident but cautious. There is optimism, but not euphoria. There is caution, but not fear. This balance often leads to slow grind moves, followed by sharp expansions when positioning shifts. The biggest risk now is anticipation without confirmation. Important news and drivers. No major negative domestic triggers emerged. Global uncertainty remains present but controlled. Sometimes, the absence of bad news allows trends to continue quietly. Tomorrow's market outlook, Nifty plus Bank Nifty. Framework for tomorrow is clear. Above key levels momentum expands. Inside range consolidation continues. Below supports short-term traps trigger. Let price speak first. Watchlist for tomorrow, educational only. This watchlist is not for trading, but for reading market behavior and leadership. Auto sector, relative strength gauge. Maruti Suzuki holds strength during market pauses, indicates confidence in consumption demand. Tata Motors reflects global plus domestic sentiment, strong relative performance suggests risk appetite. Mahindra & Mahindra acts as a proxy for rural and SUV demand, stability here supports broader auto strength. If autos continue to outperform during consolidation, it signals trend health. Banking financials, index drivers. HDFC Bank behavior here often decides Bank Nifty's direction, stability indicates institutional support. ICICI Bank momentum name among private banks, acceptance above VWAP shows confidence. Axis Bank sensitive to FII activity, weakness or strength here often mirrors broader flows. If these names hold gains, Bank Nifty strength is structural, not speculative. Realty, risk appetite indicator. DLF high beta leader, continuation suggests buyers are comfortable with risk. Lodha Group tracks premium housing demand, strength implies confidence in domestic growth. Realty strength usually appears only when risk appetite is healthy. Mini educational insert. At elevated levels, markets don't reward aggression, they reward patience and confirmation. Strong markets are not risk-free. Weak markets are not always bearish. The real skill lies in identifying acceptance versus rejection. Acceptance looks like holding gains after the first hour. Shallow pullbacks. Leadership stocks staying strong. Rejection looks like repeated failure near highs. Leaders breaking before indices. Aggressive selling into rallies. Understanding this difference protects both capital and psychology. To summarize, trend is intact. Risk is controlled. Direction depends on acceptance. Let the market confirm before committing emotionally. If this analysis helped you approach the market with clarity instead of noise, stay connected because preparation always beats prediction.